welcome back to my channel. In today's tutorial, I'm going to share with you one of these indicator which I just developed recently. This indicator is very simple and is free. I'll be sharing this indicator, the link for you to download it from my website on the description box below. So you don't need to worry about it. I will share it. So this indicator, we'll be using it in combination with a moving average. And we'll be using a 200-day moving average for this strategy. And the strategy is very simple. What we are looking at, we are using the moving average to determine our directional bias, whether we're in uptrend or we're in downtrend. And as you can see, let's start. I will show you this 200 moving average. This is all you need to apply on the chart in order to filter out which direction the market is moving. And this is a live market. As you can see, the moving average, the price is above the moving average. So with this, we know that we're in uptrend. This is all we need from the moving average. Our directional for the buy and sell will be determined by our pro trading assistant trender. This is the indicator which will give us the direction to buy, whether we are going to buy or we are going to sell. So let's go back in time so that I will be able to show you how this has fared in the market. So let's start from here. As you can see, our trading rule is very simple. What we need is to have the price above the 200 moving average. Once we have the price above the 200 moving average, as it is here, then we wait to get our pro trading assistant trender giving us a buy signal. Once you have the arrow pointing up, the color of the indicator change from red to light blue, then you have your confirmation that now the trend, the market is expected to move up. So in that case, you open a buy trade. And once you open a buy trade, for example, we are at this point, we get our signal here. Once this candle is finished, we'll get our signal. So at the opening of this candle here, we place our buy. So when we place our buy here, our stop loss is at the swing low. For this trading strategy, our stop loss is at the swing low. So here is our stop loss. For you to understand trading, you need to understand risk management. So knowing that when you have your signal at this point, that the strategy recommends that your stop loss should be at the swing low. So based on this distance, you need to calculate your lot size depending on the equity of your account, of your trading account. So for example, if you have a trading account of $1,000, so considering that you are going to open a buy here, and here is your stop loss, so you have almost 116 pips So based on this, you can decide to trade 0.05 lot size. So this is to protect your equity, because as a trader, the main focus should not be the gain. The main focus should be how you are going to protect your equity and be in the market for the long term, because that's how you make money from the market. Don't use all your capital to open one trade, because as you know, trading is all about predicting the future. Nobody knows if the price at this point will get this signal, whether this signal is going to be profitable or not. We cannot decide at this point. We allow the market to play out. But based on our trading rule, we make our decision and protect ourselves in such a way that if we lose the trade, the loss will not impact much on our account. So now we enter this, and our take profit is 2 times our stop loss. So since our stop loss is around 116 pips, so our take profit will be 2 times that stop loss. So here our stop loss should be at this region. So this is the region where we should have our stop loss. So traders, there is something you need to understand about trading. Most of the time, people look for a shiny object, considering that they believe if you get a good signal, then you make so much money. What makes differentiate the profitable traders from the losing traders are based on some common principles. One is your risk management. Your trading system is one, but risk management is the ultimate. And the third one is how you manage your emotion during the trading time. Because price can go up and come down, but if you don't manage your emotions properly, you might lose sight with how you are going to manage the trade. Sometimes some people close trade very early because they believe that the trade might go against them. They say, okay, let me quickly take this one and I can move to another trade. And the same trade will play out as per the trading original decision. And sometimes they will see a trade which is against them because there is no proper rule. They will allow it expecting that the price will reverse and the price will continue to go in the opposite direction until the account is gone. So keep this in mind. Now that we have this strategy which has given us the base rule and we know where we are going to place our stop loss and we know the direction where we are going to place our take profit. So once we open the trade based on our risk management and our loss size, we place our take profit and we allow the trade to play out. So what we do in the aspect of managing the trade is, as price is moving, the trade is moving in our direction, we will be trailing our stop. At every point where we have a swing low, we move our stop to the swing low. As the price is moving, once we have a swing low, we move our price to a swing low. Then we'll be trailing, moving with the trend as the price is playing out. Here again, we have an opposite signal. Once you get a reverse signal, make sure you move your trade to break even if you are not yet at break even. Whenever you get an opposite signal, move your trade to break even if the trade is not yet at break even. But if the trade is already above the break even point, do not bother because the price is still above 200-day moving average. As you can see, the trend persists, and again we get another signal giving us a buy trade. So remember, our main trade, the take profit, is not yet reached, but we get another signal. Here we open another trade, but this time we are opening this trade with less lot size. So if originally we opened the trade with 0.05 or with 0.1, at this point we are going to open another trade with 0.05. So if trade number 1, which is not yet reached, is opened with a lot size of 0.1, when we get another signal in the same direction, we are going to open with half of the original lot size. So here we have 0.05. And remember, at every point, our stop loss is at the swing low. So this is the swing low before we get this signal. So now you can see that our stop loss for this trade is 78, just say roughly 80 pips. Okay, our take profit, we enter the market here. Our take profit will be 160 pips. Our take profit will be here because we are taking a profit at 2 times our risk. So if our risk is 80 pips, our take profit will be 160 pips. So as you can see, the first trade hit our take profit. The second trade also hit our take profit. So we now have 2 winners in this trade. Here we get opposite signal. We are waiting. Now price is below the 200 moving average. So we wait to see if we are going to get an opposite signal and get the signal which will confirm a sell trade. But now we get another opposite signal, but the price is still below the 200-day moving average. So we cannot enter any trade at this point. We are waiting. And again, the price has crossed above the 200-day moving average. So here, we get a signal here. And as you can see, price is above the 200-day moving average. So what do we do? At this point here, we open a buy signal because our condition is met. Remember, our stop loss is at the swing low. So based on this stop loss, we decide what will be the calculation for our lot size. And as you can see here, again at this point, here we get a reverse signal. Our rule is that once we get an opposite signal against our direction, we move our stop loss to break even. So at this point, our stop loss will be here. So we are monitoring to see if the market persists and hits our stop loss, we don't lose anything. We make a little profit from the trade, but not as we expected. So here we get another signal which confirms our direction, and this time our stop loss is at this swing low. So here we open a buy trade. Here we got the signal on this candle, and here is our stop loss, which is 40 pips, and our take profit should be 80 pips. So this time our take profit was not reached. So here we make, because as per the trading rule, as the price is moving in our direction, we'll be moving our stop loss to the swing low. So here, this is the first swing low. Here is the second swing low. As price was moving, here was the third swing low. So when this price reverse, we will be stopped out here. So on this trade, we are losing we are losing 15 pips instead of the original 40 pips. So this is how you manage the trade that gives you the opportunity to make money in the market. Again, at this point, we have another signal here. We get a signal here, and here, this is our swing, the last swing low here. So we open our buy trade here. So our stop loss will be here. If you check, you will see that the stop loss is approximately 60 pips. So our take profit will be 120 pips. So you can see market move to this point, and as market is moving, we are moving our stop loss. So the first point, we move our stop loss to this swing low. When the market get to this point, we move our stop loss again to this swing low. Now the market get to this point, we have another swing low here. So when the market reverse, it hits our stop loss here. So in this trade, as you can see, we made 10 pips. So we did not, you can see that the market went down. Assuming we are not managing our trade, it should have hit our original stop loss, which would have made us to lose 50 pips or 60 pips. And in this case, we did not lose money. Instead, we made money. So here again, you can see this is a live market. Here we get a signal, and the price closed slightly at the 200-day moving average. confirming that the trend is up. And here we enter our buy trade. Okay, as you can see, our stop loss is at this swing low. So if you check from here to our stop loss, is approximately 60 pips. So we're expecting take profits of 120 pips. So now that the price is moving, if we have entered this trade, we move our stop loss now to this point, and we'll be monitoring the market. So this is the simple way to use this tool and to make a better trading decision. You just have to follow it. Understand that the 200 moving average will give you the direction of the market, whether the market is in uptrend or the market is in downtrend. Then you use the Pro Trading Assistant Trender, which gives us the buy or sell bias. So once we are above the 200-day moving average, you know that you are only looking to buy. And if the price is below the 200-day moving average, you are only looking for opportunity to sell. So this will save you a lot of stress with managing different trades, because you know the direction of the market and what to do at every particular point, and where you are expected to place your stop loss and how you are expected to manage your trade by trailing your stop. I hope you find this video useful. I will appreciate if you can share this video with your friends, and also like and subscribe to our YouTube channel. Thank you.